Well, hello, folks. My name is Benjamin Z. Miller. I am the president of Alamo Mortgage Holdings. Alamo Mortgage Holdings is a company that can pay you long-term passive income over many years when you purchase one of our corporate income bonds. We invest into the United States. We purchase packages of mortgages in the United States. We buy them at a steep discount. We make a bunch of money doing that, and that allows us to pay 8% to our bondholders. Before I go through this presentation, I'm going to just read a legal disclaimer, and that is, as accredited investors, you will be aware that all investments carry some level of risk. This investment is only available to investors who are able to assess their own appetite for risk. Please read the risk statement within the investment memorandum before investing. So let's talk about the financial product that we offer. We offer a bond that pays 8%, and the term ranges from 3 to 5 to as long as 50 years. The team that works on this company, that works for our bondholders, has 200 years of business experience. And the mission of our company is to provide passive income to bondholders by purchasing real estate-backed mortgage notes in the U.S. And we focus on just one state, the state of Texas. So the interest rate that we pay is identical on all of the different terms. Once per year, we set the rate that we offer. And this year it has been set at 8%. So if you want to lock in for a long term, that 8% rate, you can purchase a longer term bond. Or if you want to just do a shorter term, you can just select a shorter term bond. But every year we make an adjustment based on the prevailing economic conditions. So let's talk about the United Kingdom, and let's take a look at this chart here, which shows the long-term history of the US dollar and the British pound, the exchange rate. And you can see that over the decades, the British pound has lost a lot of value against the US dollar. And what this means is, if you have the majority of your portfolio in British pounds, you have had this same thing happen to your buying power, where it has decreased, because back in 1945, one British pound would purchase approximately $4 American. And now, as of the 1st of January 2023, we are down to where one British pound will only buy $1.21 US. So that is something that's relevant, because getting an 8% return in the United Kingdom is not the same thing as getting an 8% return that is in the United States and denominated in dollars. So how can we pay 8%? Sometimes I get asked this question: how are we able to pay such a high rate? And that is because we're purchasing the mortgage debts at a discount. So we may have a mortgage that has a face value of $100,000. Our company goes in and negotiates. We buy it at a discount. We might only pay $70,000 cash for it. So that 10% rate that the mortgage paid is now, the yield on it has increased to 14.2%. So that allows us to pay out 8%. That's how we do it. It's a very simple business. But sometimes when I talk to people, the first thing they think is, that's a good idea, buying mortgage notes. Maybe I should do that too. And that is a good idea. It is a great idea to buy mortgage notes, but you should have some proper education before you do this if you attempt to do it alone. You should know what creates the value of a mortgage note in order to price them correctly. So the 6 factors that are important are: you need to look at the buyer. Who is it that is guaranteeing the payments on the mortgage notes? So does the buyer have a low credit score? Does the buyer have a high credit score? That impacts the value of the mortgage note. What about the collateral? If the property has a value of $100,000 and the note says that it's for $200,000, in other words, where a seller got lucky and sold a property for far above market value, maybe to an out-of-town buyer that didn't know the value, That note is not worth 200,000 if the collateral's only worth 100,000. You have to look at the actual value of the collateral. You need to also look at the down payment. How much money down did the buyer put down when they purchased the property? Did they put down 5%? Did they put down 10%? Did they put down 20% or more? In general, the more they put down, the less likely they are to default and the safer the note is. What about the interest rate? You would prefer to purchase a note that has a higher interest rate. A 10% interest rate is more attractive than one that is a 5% interest rate. Of course, the history of the payments. This is something that you would obtain from the seller. The seller should have some record of payments. And ideally, that record has been third-party serviced, where you're not just getting an Excel spreadsheet from the seller and the seller telling you that, yes, he always pays on time on the first. It's better if there's a third party that has a record of the exact day they pay, and it's not the seller giving you that information. And then the last thing that's important is the actual paperwork that was done when the note was created. How was the paperwork done? Was it done properly with lawyers? Did lawyers draft the legal paperwork? Or was it just two guys at a kitchen table and they worked out a deal and took out Microsoft Word or LegalZoom and created some legal documents? Here's an example of a real property. This is not one that's in our portfolio, but I show it because it's illustrative. This property is in Texas and it was priced at $120,000. And I want you to imagine this house that the buyer put down $20,000. So what happened is the buyer hypothetically went to the seller and said, "I'd like to buy your property." The seller said, "Okay, great. I want $120,000. The buyer said, "I don't have $120,000. I've only got $20,000 in cash, but I can make payments." The seller said, "No, go talk to the bank. I know a banker. He'll give you a loan. Go to the bank." The buyer went to the banker. The banker said, "Hey, you're self-employed. I'm not going to give you a loan. You've got a bad credit score. I'm not going to give you a loan." So at any rate, the seller and the buyer had a conversation, and the buyer said, I can't get a loan, but I can pay you $20,000 in cash. And the seller wanted that money, and they didn't want the property vacant. And they said, "Okay, I'll do it, but I want to get a 10% rate of interest. I'm not going to finance it to you at a 5% rate of interest." They agreed on 10%. This gave monthly payments of $877.57 per month. And now I want you to imagine that 60 months have passed since the transaction closed. And during that 60 months, the buyer has made every payment on time. And it's been third-party service, the record of payments. So the unpaid balance on that note is $83,000. The unpaid balance on that note is $96,574, because on a mortgage, the majority of the payment, the first few years, is going to interest, not to principal reduction. And if this is a 30-year mortgage, you're going to see very little principal reduction. So now let's imagine that seller wakes up one day and needs cash. That seller wants cash. So the first thing he does is he calls the buyer and says, "Hey, can you please pay me off? I don't want to wait another 26, 25 years. And the buyer says, "The bank still won't give me a loan." So the seller then starts calling around the owner of the note, and they call a company like our company, Alamo Mortgage Holdings. And they say, "Hey, I've got a note and I'd like to sell it to you guys. Will you pay me $96,574? That's what's owed on it. I just want to get my money, and you guys can get a 10% rate of interest. It's great." And then Alamo would say, "Well, sir, that's not enough money for Alamo. We need to get a higher amount." And there's some negotiation back and forth, and we would agree on, for example, a 12% yield. Then we would make an offer, and the maximum offer that we could make would be $83,322. We would still try to buy it for $75,000, for $78,000. But we might go as high as 12% yield. Really, we'd like a 14% yield, but this is an example just to show how it works. So that sets an upper limit on the sales price. And that's how we can pay 8% to bondholders. Now we're going to talk about what is great about working with Alamo Mortgage Holdings, because you are dealing with packages of mortgage debt instead of just one individual mortgage. So I'm going to show here a real example of a package of mortgages, and you can see what they look like. This is on a real package of mortgages in Texas. Well, this right here is actually an example of what a portfolio of loan notes might look like. So this is actually a real portfolio, and you look here and you can see the name of the borrower, the number of months. You can see the interest rate. This debt is actually pretty high. 14.75% is what they're paying on that mortgage. The monthly payment is $278.50. Then you can see the terms, the status, this sort of thing. So, I mean, you've got a list here, and this is an example of a package where a package of these mortgages can be purchased. This type of deal would be done by a larger investor. It would not typically be a single investor that would buy this package. For example, my company, Alamo Mortgage Holdings, this is the type of package that we might actually purchase, something like this. But if you're just starting out in investing, you might start out by you're just going to buy one mortgage note. So, for example, you might come in and this mortgage note, if you find something like this out on the market, you might try to negotiate down from, the unpaid balance at $89,570. Maybe you try to buy it for $59,000 or $69,000. But that would be one note. But you can also purchase packages of notes. And that's something that Alamo Mortgage Holdings is involved with. It's a company that's a United Kingdom company that actually purchases packages of mortgage notes. So wanted to give you an idea of what a package of notes looked like. So that is a big advantage with Alamo Mortgage Holdings, the fact that you're getting access to not just this note, but multiple notes. Now, I want to talk about another question that I am sometimes asked: why bonds? Sometimes people will say, inflation is running so high, I don't think buying bonds makes any sense. Maybe I should go buy some cryptocurrency. Maybe I should go buy some stocks. Well, let's talk about that. But rather than giving my opinion, I'm going to talk about a Nobel Prize winning economist and give his opinion. His name was Harry Markowitz, and he actually won the 1990 Nobel Prize for Economics. And if any of you have accounts at Merrill Lynch or at Bank of America or BlackRock or any of these firms where the geniuses are going to help you with your portfolio, they love to use this work from Markowitz because it relates to what's called modern portfolio theory. And it's basically just a complicated theory that a lot of factors and variables and math, and it's so fun for people to play around with this. But here's the thing: when Harry Markowitz did his own portfolio, even though he had created this elaborate theory that all the geniuses use at these places, he didn't do it that way. What he did was once a year, he would adjust his portfolio. He'd put half of the money in bonds and he'd put half of the money in stocks. So what he would do is, if at the end of the year the stocks had increased a lot in value, he would actually sell some of the stocks and instead buy bonds. And then vice versa. If the stocks were decreasing in value, he would sell bonds and buy stocks. So it prevented him ending up in a situation where he was all 100% in the market and then the market dropped, because there's a lot of smart people that try to predict what the market's going to do. And a lot of times using something simpler can make sense for some people. And I just ask you to think about your own portfolio, what percentage is in bonds. And if Alamo Mortgage Holdings can help you with that, to get you a portfolio with more bonds, more high-paying bonds, not the kind of government bonds that they pay so little they don't even keep up with inflation. With Alamo Mortgage Holdings, the bonds are good paying bonds that are hundreds of basis points over what you might get on government bonds. So why Texas? That is sometimes a question that we get from people. Why Texas? Well, the reason we focus on Texas is our team is from Texas. The majority of our team, we have a lot of experience in the state of Texas. That's one reason. So we know the laws in Texas. We know how the mortgage industry works in Texas compared to 50 other states where the laws are a little bit different in each state. So we're focusing on just one thing so that we can do the best possible job for our bondholders. And that is we focus on buying mortgages in Texas at a steep discount so we can pay the maximum, the absolute most passive income to our bondholders. The other advantage is Texas is a state that is winning. These states like California with their job killing legislation, with their business killing legislation, you've got a lot of the smarter people in California, they're moving out of California. They're saying, hey, I'm not going to try to run a business in California. I'm going to go to Texas where I can have some freedom for my business. And people from New York, they're saying, you know what? I think I've had enough of this New York stuff. I'm going to go to Texas where instead of paying $1 million for some dinky apartment, I can get a palace in Texas for $1 million. They think the prices of our real estate are so inexpensive in Texas. So what happens is when all these people move into Texas, it drives up the value of the real estate. And that is great for us and it's great for our bondholders because our collateral, the collateral that we secure our bonds with is Texas real estate. So as the Texas real estate market wins, our bondholders win because the value of the collateral is going up. So that's the basics of it. Okay. What are the advantages of this? Well, the first advantage is you can reach your passive income goals far, far more quickly. Instead of having to look around for a lot of different investments and, oh, I'm going to put 50,000 here, I'm going to put 25,000 here, 100,000 here. You can very quickly with just a calculator say, how much passive income do I want? Okay, I can get 8% on these bonds. Why don't I buy X number of bonds? And if you don't have as not much passive income as you want, you can do it over a period of years where maybe you do a 5-year plan where you're going to put, for example, 100,000 per year into the bonds of Alamo Mortgage Holdings, and you can do it that way. Another advantage is you get maximum diversification compared to going out there where a lot of these mortgage guys, they are so foolish. They'll go buy one mortgage, and if anything goes wrong on that mortgage, they're damaged, especially if they use their own money to buy it. It's much wiser to work with smarter people that have more experience in the business instead of trying to do it on your own, just going and buying an individual mortgage note. Now, there's nothing wrong with doing that if you have a passion for it. If you really want to work hard, put in the years of time it takes to get the skills, absolutely, you'll be successful. But if you're maybe already a professional, you've got something going on with your life, maybe you're a high-paid surgeon, maybe you are a dentist, maybe you are a CEO of a company, Alamo Mortgage Holdings was built for you. We are here for you where we can solve the passive income, where you can get long-term passive income for your family, for yourself, and you can do it with a minimum of hassle and something that's secured by hard assets. The other advantage is you're not paying any fees. A lot of my friends, they're in the private equity industry, they're in the hedge fund industry, and they just love to tell you about fees. They love to tell you about the 2 and 20 and the carried interest fee. And I'm not saying those guys don't deserve their fees. I'm friends with a lot of those guys, but I am saying if you purchase an Alamo Mortgage Holdings bond, your money's not getting burned up by a bunch of fees. We have a simple business where we pay you 8% and we go buy mortgage notes at a steep discount that lets us make significantly more than 8%. It's a win-win. It's a win for our bondholders and it's a win for our team that's doing all of the work. Everybody's happy. It's so simple. You place 100,000 pounds in a year, you get 8,000 pounds. In 5 years, you're going to earn 40,000 pounds. And in 50 years, you're going to earn 400,000 pounds. You can decide how much you want to earn. You can lock things in the long term. I want to mention the team briefly. We've got a team that has 200 years of business experience and 100 years in the mortgage and the real estate industry in Texas. Members of our team have overseen up to $1 billion in financial assets. So we have team members that have worked with clients, including Microsoft, Chevron, Exxon, Eventbrite, and Fora Financial. I'm Benjamin Z. Miller. I'm the founder, the director. I have an extensive experience in business. I've bought real estate many, many years in the United States and in Europe. I've also been active in business acquisitions in the US and Europe. So I bring a lot to the team. We have Marina Zaharelska. She's our international investment coordinator. She graduated from the EU Business School with international relations. She speaks 5 languages. Actually, she's up on her sixth language now. She started her 6th language, I guess. So no matter what language you want to speak to her in, she will be able to communicate with you. Almost any language, a common language. So Scott Wynn, he's our industry expert for Alamo. He's got 30 years experience in the business. He's a specialist in taking an asset and making it produce income. So he can take an asset like a loan note that maybe is having a problem where the borrower has stopped paying, and he can work things out and get it paying again. Great guy. Fred Hobbs, who is the director of mortgage servicing. And by the way, if you need mortgage servicing, SecureNet Loan Servicing is the best of the best. They are the best company for mortgage servicing. Alamo Mortgage Holdings, we went through an extensive process when we selected SecureNet, and there was no question that they were the best. SecureNet is a company that Fred Hobbs owns, and he's built such a great company the way that he has done that. But Fred is also a licensed, he's the founder and president of Texas Mortgage Capital. He's been involved with thousands of transactions. He adds so much to the team. David Jones is our in-house legal counsel. He's a licensed attorney in the state of Texas, and he helps us with all of the legal documents. We have Mark DeRuyter, who is our chief technical officer. He has a lot of years of experience with mortgage software. And actually, if you've used mortgage software, you know, those calculators where you can figure out what your payment is, there's a possibility you may have used some of his software because he's been involved in creating some of that. So we've got a great team. We have Andrew Richings, who's in the United Kingdom. He's the founder of Thomas Kelly Holdings. He's a UK citizen. He works with ultra high net worth and high net worth investors, providing them with fixed income bonds and private equity opportunities. And he brings tremendous experience to the team. So let's go through the reasons. Why should you buy the notes? Well, if you're looking for passive income and you want an easy solution that'll pay above average passive income, you need Alamo Mortgage Holdings. How long are the terms? We offer 3-year, 5-year, all the way up to 50-year. Can you put the notes into your self-invested personal pension? Well, that is actually up to the provider, but there's no reason that I can see that it wouldn't work. And we know a lot of SIP providers that can help you if your SIP provider is not helpful. Is it a regulated product? No, this product is not regulated. And that's part of the reason that we can pay so much more, because we haven't had that additional burden and expense of having to go through regulation. Even though it's not regulated, it is secured by real assets, by hard assets. Who can invest? Somebody that's over 18, a charity, a trust, a company. Come one, come all. How's the money protected? We can go over that on a one-on-one call. Can you invest through a company? Are joint applications permitted? Yes. How's the tax managed? We pay all of the money to you. We make it simple. We pay all the money to you. Are there any limits on your investment? No, you can invest whatever you like. We suggest 100,000 pounds at a minimum, but we can work with you if you want to do something differently. How can you invest? It's so easy. Just go to www.alamomortgageholdings.co.uk, click on the contact form, or just call me, +1 for the United States, 817-203-4160. I hope that helps, and I wish you good luck with your investing, and I be happy to answer any questions.